percentage again?
11%.
11%? Wow.
So, look, it seems low because 60% of job seekers would prefer to get a remote job, and you really have about 60% of all the workers competing over about 10-11% of the job postings. So there is a big mismatch between demand and supply of remote work opportunities. That said, we did a survey of employers recently, and we did find that more had pulled back on their remote work policies than expanded remote work. But even so, very few had gone back to the 5-day in-office work week. So the 5-day in-office work week is effectively dead. Very few companies are requiring people in the office 5 days a week. Flexibility is the name of the game.
Well, pretty interesting, no doubt about it. Yeah, it's just interesting to see kind of some of the trends that are out there, because we certainly see more and more people coming back, right? Or CEOs and leaders insisting on it.
I will tell you that Mondays, Tuesdays, and Wednesdays on the subway are very crowded. Thursdays and Fridays, not so much.
I thought about that this morning coming through World Trade. I'm like, oh, okay,
Nobody, right?
There's no crowd. I can kind of walk through it. Really great stuff. And we so appreciate getting time to check in with you. Julia Pollack, take care and have a great weekend. Chief Economist over at ZipRecruiter on Zoom in Los Angeles. I have to say, going through kind of their surveys and stuff to see things starting to tick down in terms of hours worked, wage growth, like really kind of meshing so well and so strongly with the jobs report this morning. All right, everybody, right now we're going to head to our Bloomberg News Bureau in Atlanta. Bloomberg News international economics and policy correspondent Michael McKee with the Atlanta Fed President Raphael Bostic.
We'd like to welcome everybody to Bloomberg Television and Radio Worldwide. We're happy to be joined by Raphael Bostic, who is the president of the Federal Reserve Bank of Atlanta, which, if you could see over my shoulder, is right over there. Let me thank you for coming into our offices, however, and we thank you for warming it up from yesterday. It was a little chilly.
Well, the pleasure's mine, and welcome to Atlanta.
You were the first on the FOMC to say the economy didn't need any more rate increases. Did the jobs report today basically vindicate your view?
Well, I wouldn't say vindicate. This is a journey, and we're going to be on this journey for a while. What I will say is I'm pleased with the number. It came in at a level that is consistent with what my outlook has been, and it really tells me that our policies are really starting to work through the economy in a way that can help us get to our 2% target for inflation with minimal pain is what I'm hoping for.
Well, what drove the decision on Wednesday to leave rates unchanged? You came into the meeting with inflation up a little bit. The last jobs report was very strong. Consumer spending was very strong, and yet everybody decided to go with the Bostic view and hold. What was behind the thinking there?
Well, I'll tell you what was behind my thinking on this. You know, in addition to looking at the data, I do a lot of on-the-ground intelligence. And in a period that was really unusual for me, everybody was saying the same thing, which is that things are slowing down. We are seeing the economy start to, quote, normalize is a thing that people have been saying relative to this hot pandemic period. When I get unanimity on that, that tells me that there's something that's happening on the ground that is probably stronger than what I might see in the data. And then the data, even though they did come in very strong in September, if you looked over a longer term trend, it still said that the economy was moderating. And those two things together made me very comfortable with the notion that we still have time to watch, be patient, and be cautious and make sure that we understand the trends and don't overreact to any single data point.
Well, barring some exogenous shock, would you say you're basically at the peak now that you don't need to raise rates anymore?
So what I would say is this. There are three possible outcomes. Either inflation is going to stall out in this trajectory, it's going to continue slow and steady, or it's going to go off a cliff. I have all of those possibilities in play, and I'm going to stay on that. Today, my outlook is that we're going to stay on that slow and steady. And if we continue to do that, then I think where we are now will be sufficiently restrictive to get us to the 2% level for inflation. But there's still a lot that's going to happen. And between now and even the next meeting, we're going to get a couple of jobs numbers. We're going to get a couple of readings for inflation. And that'll tell us and give us more signals as to what's going on in the economy.
You mentioned talking to a lot of people in your district who were telling you things are slowing down. Can you characterize that? Because not long ago, the question was, did the Fed go too far? And we're not just slowing, we're going to fall off a cliff, as you mentioned. And others are saying the soft landing narrative. Where do the business people see it?
You know, the business people are in an area of moderation back to normal. They understand that they've gone through a period where they've had sales that are at levels that, frankly, they didn't expect. And the decline in those sales and that activity over time has come in slower than they expected. But it is continuing. And that's really the dynamic that really governs. You know, the thing that I think people need to just keep in mind is that through this pandemic period, through this high inflationary period, we've had exceptional demand. Consumers have been continuing to spend. And once that gets back to a normal level, then we'll be back in a more normal environment where inflation will be at 2%. And so we needed to work through that. And another thing that's been quite interesting is that supply has really responded as well. We've seen labor force participation be much higher than I think I had my outlook for sure. And that's been another moderating force to help us get to where we are today.
There are a lot of questions about long and variable lags, and maybe they're hitting the economy right now. You guys got the senior loan officer survey this week. Is credit still tightening the way it has been?
Credit is definitely tight, and there is still stuff to happen there. We know that a lot of corporate bonds, for example, they're about to reset. And those resets are going to come in at interest rate levels that are 2 or 3 percentage points higher than they were previously. And that's going to be a drag. I hear the same thing in commercial real estate, where there are a lot of people who are expecting some of these buildings to struggle to hit the valuations that were projected in the previous lower interest rate environment. And that's going to be some disruption as well. So there is still stuff that's going to come from our policy. But I think that ultimately will contribute to us getting ourselves to that 2% level. And right now is really just let the time pass. Let's let the economy work through all of this and see where we are at that point.
Well, you and others at the Fed have made the case that now that you're higher, you can go longer, that you'll leave rates at this elevated level for quite some time. You must have modeled out some idea of how long it would take at this level to bring inflation down to the target.
So we have a projection. Like for me, I would say it's going to be in the second half of next year. Of course, that's still 8 months from now, 10 months from now. A lot's going to happen. So I don't try to get too precise and exactly it's going to be this meeting where something happens. But it is still a ways off, and we still have a lot to watch and monitor as we think about understanding how the economy is evolving.
And you think the economy will do fine at this level of interest rates until that time?
So fine is, you know, this very subjective word. I do think we can get to inflation to the levels that are close to our target without seeing a recession. I do not have a recession in my outlook, but I don't also see us growing continuously at 5 and 6%, in the quarterly basis. We're going to be in sort of a slow, steady growth that's methodical. It won't be exciting a lot of folks, but it will be one that sort of doesn't feature a lot of additional pain and disruption for American families.
Chairman Powell has talked about growth needing to be either below trend or potential, depending on the day. We discussed that at his news conference. But do you see that as necessary, that it needs to come down significantly? And do you still believe that unemployment needs to go up significantly in order to bring inflation down?
So I don't know. What I would say is this. There are many states of the world where we can get to inflation to where we need it to be, where we don't see a wholesale and widespread disruption. Part of that is how strong the supply side continues. I saw a report today that suggested that the supply chain disruptions are fully a thing of the past. We might actually be looking for additional supply to be able to fill in. If that happens, then you can get the strong growth, you can get the minimized unemployment, and still see the price level fall, the rate of the price level increase, decline. So that's what I'm hoping for. But of course, I've got to be ready and prepared for any kind of eventuality. And we'll just have to see how it plays out.
Well, the economy growth and especially unemployment have not performed as anticipated by the Fed going forward. So what is it that would get you to change your view of what needs to be done? Is it basically just watching inflation and whether it comes down or starts to go up again?
So to me, there are two things, and I might add a third. But the first is just what's happening with the trajectory of inflation. If it continues to progress towards our 2% target, to me, that's a very positive sign that says, let's let our policies working, let's keep it working. The second thing that I've been looking at from the beginning of the pandemic is inflation expectations. And if we find that consumers or businesses are really starting to feel like that long-term level of inflation that's going to be the baseline is creeping up, if that's their expectation, we've got to act and we've got to take that under control. But that's not what's happening right now. And the long run expectations have stayed relatively steady throughout the pandemic. And the short run expectations have fallen significantly. The third one that I'm looking at also is the wage level, and everyone's talking about this. To me, I think that's been a very welcome development in terms of how it's evolved, and that the businesses I talk to are saying we are getting to a place where we're back to our old style. That the 10 and 15% increases in wages that we've had to do the last couple of years, they're not on the table, they're not necessary, and I'm starting to hear more and more. The increase we're going to do this year is very similar to what we were doing in 2018 and 2019, and that's very welcome news.
Well, you said probably see progress on inflation the second half of next year. So at that point, what do you do? Do you start looking at rate cuts?
Well, I would say I'm hoping and expecting to see inflation progress until the next year. And then we'd have to really start to think about, like, what's our long-run neutral level? I think we're in restrictive territory today. And as we get closer and closer to our target, we're going to have to think about moderating the level of our policy stance. But that's down the road. And, it's interesting. I talked to a lot of business people, and they ask, like, how are you thinking about this? For me, if we're restrictive now, we can't wait till we're at exactly 2%. To start reducing rates. It's got to be before that. But the dynamic in that precise moment will really depend on the context. So I can't say with any degree of certainty exactly when that will happen. But as we get closer and closer to that 2%, I think that'll be something that I'll have to take on board a lot more.
Well, your background is in housing, and so this raises the question of what happens to housing. People do not want to sell a 7% mortgage at this point and take out one and sell their 3%. So is housing basically in the dumper now for years to come?
Well, I hope it's not years to come. But look, we've had an extraordinary period with incredibly low interest rates, and a lot of people were fortunate enough to be able to buy homes and get mortgages at those low rates. That is our reality, and so there is going to be some rebalancing that needs to happen, and that'll happen over time. I don't think this is all going to happen in a 6-month period, but my objective right now is to get inflation under control so that our policy rates can get back to something that's lower than where it is now. And I'm hopeful that mortgage rates will follow that. And then we'll be back to a more normal housing market where people will transact and move and buy and sell as their life circumstance determines.
Well, then, a last question. When you get back to whatever normal is, should people expect it to be higher than in the last 10, 12 years? A higher interest rate, perhaps a little bit higher inflation rate, maybe growth, potential growth a little bit higher?
Well, I would expect, yes, higher than the last 10 years. We've basically been at zero. Zero, I don't think, is a reasonable long-run expectation for where our interest rate should be. So it'll be higher than that. But I really don't think inflation will be higher than our 2% target. We want to get there. And that'll be the goal. And if we get to that level, I think that sets up the U.S. economy for pretty solid growth over the next several years.
All right. Raphael Bostic, thank you very much, President of the Atlanta Federal Reserve. We'll send it back to you.
All right, thank you so much. Our Bloomberg News international economics and policy correspondent Michael McKee there at our Atlanta Bureau, Bloomberg News Bureau. Of course, with the Atlanta Fed President Raphael Bostic. That's simulcast on Bloomberg Radio and TV. Great conversation, so timely considering the Fed meeting, the drop of data that we got this morning.
I didn't see him get up and do a victory dance.
No.
Which, Steve Matthews said he could do
only
today.
Saw him from the waist above.
Given what
his legs could have been
given what he's been saying since the beginning of the year. But He didn't say I told you so either, but
No,
You know.
but he's been, I think among the dovish Fed members. But I thought what was really among the headlines that are crossing the Bloomberg about that conversation, that a policy shift by the U.S. Central Bank would be warranted before inflation was at 2%. So basically saying, he said, we don't have to wait to get to 2%. In fact, waiting for inflation to be down to 2% would be probably too late. And so we could expect some kind of moderation in U.S. policy before that.
okay.
rate
But
cut.
there is now a lot of data between now and the December meeting.
You say data dependent, and you're out
a
of
couple
here.
jobs. I'm not saying it.
All right.
But he did say there is a lot of data to assess before the next Fed meeting, and that he doesn't have a U.S. recession in his forecast.
Which I thought was also interesting. And he says he may support holding rates for about 8 to 10 months. So when we talk about higher for longer, folks, there's a little bit a little bit of a time frame, at least from one member of the Fed. And keep in mind, there's going to be a lot of Fed officials speaking until we lead up to the next Fed meeting.
We'll
so
actually hear
get
from him
ready
again
for the
next
narrative,
week.
right? And some are more hawkish, some are more dovish. So the narrative will evolve.
Hey, let's get an update on business news. Charlie Pellet is standing by here in our Bloomberg Interactive Brokers studios. Hey, Charlie.
Oh, hello there, Tim. We've got just about 14 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ all in rally mode on the week. The S&P looking at a gain right now of 6%. S&P today higher by 44 points ahead of the close, up now by 1%. The Dow up 247 points, up by 0.7%. The NASDAQ Composite Index up 189. That is a gain right now of just about 1.4%. 10-year yield 4.73%, with the 2-year 4.83%. Stocks rose, bond yields fell as signals of cooling in both the labor market and services reinforce the idea that the Fed is done with rate hikes, while bolstering bets on cuts as early as June. Atlanta Fed President Raphael Bostic interviewed moments ago right here on Bloomberg Radio, and he reacted to this morning's employment report.
I'm pleased with the number. It came in at a level that is consistent with what my outlook has been, and it really tells me that our policies are really starting to work through the economy in a way that can help us get to our 2% target for inflation with minimal pain is what I'm hoping for.
And again, 10-year now yielding 4.57%. West Texas Intermediate crude down 1.7%. And gold is up $6 the ounce, up 0.3%. Gold right now at $19.92 the ounce. On an up day for the rest of the market, we do have Apple shares after earnings. They're down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just under 12 minutes left in today's trading session. We've got a rally underway. As we said, weaker U.S. economic news, good news for the equity markets.
6% higher over the last 5 days on the S&P 500.
Yeah.
Wow.
I know, right?
Wow.
Like, what happened? What happened to the other narrative? Let's get
Don't
to
know.
it.
I think we got some data this week that kind of shed some light on what people think is going to happen.
It's a very different tone this week and certainly on this Friday. Bloomberg News markets reporter Abigail Doolittle is here as we drive to the close on this Friday to wrap up the day and the week. She's here in our Bloomberg Interactive Broker studio. We kid, we say everything is awesome, like when everything seems to be the upside on the equity side of things. How are you seeing the trade today? Is it a healthy one? Is there volume behind it?
There is volume. At the highs, the volume was 24% above the 20-day average. So the buyers are out there in force. Whether or not it will last, though, I don't know. And I think that this narrative that's emerging, to your point, just last week at this time, everybody was bearish and not liking the technicals in terms of where the S&P 500 was below the 200-day moving average. And now people are all in. And I would caution for two reasons. One, the technical, the S&P 500 and the NASDAQ, and perhaps a couple of other indexes, Apple, in fact, not an index, but a stock, they are are, over the last several months, they're showing a series of higher lows and resistance. They're hitting right up on resistance. It's been so reliable, basically, since the July peak. So we don't know yet whether or not these buyers, how serious they are, or more importantly, how serious are the sellers, because the fact that those are lower highs tells you that the sellers have more conviction each time. The buyers don't have enough conviction to take it up and over. The other thing that I would say that matches that is, I'm sort of stunned that out of this week we have this new narrative that the Fed is done.
I'm with you on this.
Yeah, because 1 month of bad news, I don't even think it's bad news. I mean, unemployment is 3.9%.
Right.
150,000 jobs were added. Yes, it missed. Yes, September was revised down, but core inflation, I think it was in September, was still a little bit sticky. They want to make sure that we don't go back into the 1970s. Fed Chair Jay Powell has been very, very clear in terms of saying that they are willing to sacrifice the economy to make sure that we don't get into some crazy sticky inflation environment. And I'm looking at the work function, and it's showing 1% of cuts next year. He's literally said, we're not thinking about cuts for years. And he, on the meeting on Wednesday, I actually didn't hear him say this, but Doug Krisner said that he once again said they're not even thinking about cuts. So there still is this divide between the markets and the Fed. I think it's going to be a little bit rectified early next week. I wouldn't be surprised if that selling pressure comes in.
Because of other Fed speakers, because of data, or just because it's like,
because I think this is
folks.
FOMO. You know, the Goldman Sachs Unprofitable Tech Index, which, you know, I don't want to say it's a dash for trash, but it's up 15% this week. So, you know, people, hedge funds have been having a hard time from what my sources tell me. I was actually just talking to somebody at one of the brokerage houses saying that hedge funds have been having a very tough time over the last couple of months. This week they're having a tough time because they went into this week short. Now they're being forced to cover. But
So do you think a lot of this is short covering?
That's an interesting question. That's a great question, Tim. I bet today there is a degree, because if you look at some of these charts, there's gaps, which means there's these big holes, especially on the Russell 2000, the equal weight. It's completely emotional buying. It's not based on information. It's not steady as she goes. It's like, let's just get in there. But you still have these sellers coming up until that trend line, that downward sloping trend line, the downtrend since July, is broken firmly on a weekly basis. I would say we just something very clear that we're confident that our work has been done, that we don't need to do anything more, and we're comfortable hanging out higher for longer. I mean, this Fed has been so transparent. Bond traders have chosen to not listen to what they've been saying all along. And this is the other thing. I don't know how you guys felt about it, but I listened to the press conference the other day. My take was not that all of a sudden,
it was not dovish to me.
It was not dovish at all. It could have gone either way,
agree.
but for some reason, I think that traders are in so much pain that they're choosing the dovish narrative. I really think that we could just whipsaw next week just because we went too far, too fast. This week, we do have the UMich inflation data coming out next week. We then, the following, have CPI and PPI. The following, or 2 weeks, the end of November, we have PCE. I don't think December is necessarily a live meeting unless something should happen that precipitates it in terms of that data. But I don't think that that's the case. But I just think it's too early for traders to say they're done. I also think it's too early to say higher for longer in and of itself could be painful.
Right. You get another year
of
rates
up here.
Look at already what
the housing market,
exactly.
The commercial real estate market.
Well, think about all the things that the housing market that are connected to the housing market.
Yes.
You know, you have all the realtors, first of all. If they're not if people aren't selling or buying,
which are having a problem anyway because of that ruling in Missouri the other day, that the housing market's going to be totally shaken up just because of how brokers get paid. Then like Home Depot, Lowe's, construction workers,
paint companies.
Whirlpool. We talked to the Whirlpool CEO, right, who said that people, not doing any kind of home improvement, they'll replace.
Because they're uncertain right now.
If something's broken.
I think just money's expensive now. I mean,
not discretionary. Not discretionary.
They're just feeling uncertain.
I think I think there's just a kind of pulling back a little bit.
Liz McCormick made a joke on our air. She said, "When are we going to see rates lower? I got to build a new deck, but HELOCs are too expensive right now."
Well, yes, and I was actually just 3 days ago, talking to a big-time commercial real estate investor. Like, he's known as one of the biggest mall investors, especially he buys distressed malls. Has done very well, and he's starting to buy New York City office. But he was saying right now that because so sometimes he'll buy a property where the mall doesn't perform as they expect it to. So what they do is instead develop it. But he said with interest rates where they are right now, nobody's really wanting to do too much development. So yeah, it's a real trickle through to the economy.
I'm trying to think of the market guest that we had on, who is in the middle of the country in Wisconsin.
Last week.
Yes, and who said, you know, people may say we're not in a recession. Menominee Falls, help me. Anne Maletti.
I wish I
Anne
could.
Maletti.
There we
Okay,
go.
okay, thank you.
What we were doing is really, we were waiting for Ari Olagami, who remembers every single
does.
thing.
Like, come on, Ari. We're like, look at him. He goes to the bonus round. But it was interesting, and she said, listen, we may not technically be in a recession, but I'm talking to friends, I'm talking to people around me, and they're complaining of paying $1,000 now for a car payment. They cannot buy a house because the mortgage rates are so high. So people around are feeling it.
I absolutely agree with you on that. And I've heard a lot of tangential reports along those lines too. And I think something else that we need to think about, and I think I have been told that this is actually I've been told that like uncertainty around what's happening in our country is a few people have told me that they're nervous to make different moves financially just because it is so divisive. But then when we also think about the Middle East, I'm kind of stunned that we have this sort of week, given the fact that it's such a wild card in terms of the conflict in the Middle East. You have Hezbollah saying that they're willing to go, step up
and broadening it.
But we don't have a ton of time, so I want you to explain this a little more because this is really interesting to me.
Sure.
What effect would that have on the market apart from oil?
Well, I think that well, I hate to speak in terms of ifs here, but if the conflict were to escalate and other parties were brought into it, I think at that point it would be assessed that the U.S. would potentially have to go into it. And at that point, it would mean that the U.S. corporate profit outlook could be affected. So a ton of hypotheticals. We're not there at all.
But the connection could be there.
Yeah. Well, first of all, you would have the headline risk. So you would have the immediate headline risk. Now, then what you do is you say, is the headline risk, could that actually affect the corporate profit outlook? If the headline risk somehow did involve the idea that the U.S. was really going to have to take a stand and maybe step in and become involved, at that point, I mean, I'm not an expert, but I would make the quick assessment that, yes, that could potentially affect the corporate profit outlook. Now, wartime is actually good typically for the economy because it, we clearly don't want war, but that could be good. But initially, I think that the assessment would be that it's also just the uncertainty of it.
That's what I was going to say.
Yes,
it's another major uncertainty.
Yes, especially in a region where it's, yes. I think
it's more complicated because there's China, there's Russia.
Yes, agree.
So I feel like, you do the whiteboard and the relationships are very, very tricky and there are going to be complications. We saw that with the war in Ukraine, right?
Yes.
All of the wheat, the grains, and that kind of caught everybody off guard. You never caught us off guard. You always keep us informed. Abigail Doolittle, Bloomberg News Markets reporter, amazing always here in studio. All right, folks, we're counting down to the close on this Friday. Over to our TV colleagues Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Tim Stenovic. Welcome to our audiences across all of the Bloomberg platforms, television, radio, originals, and of course our partnership with those folks streaming this on YouTube. Carol Masser, about 2 minutes to go until we get to these bells here. And I was just talking with Katie here. The big outlier today are actually small caps. The Russell 2000 up almost 3%.
Yeah, really kind of roaring back here. And maybe it's kind of interesting, right? If things are starting to slow down, shouldn't that mean that the small cap should have a little bit of a harder time if the economy could maybe come undone? I don't know. I feel like there's a lot of mixed questions. We were just talking with Abigail Doolittle. Feel like, how much the week here. Which one am I supposed to believe at this point if I'm an investor?
Yeah, she basically said that she spoke to sources today who gave her the idea that people should be cautious in an environment like this. I mean, Abigail told us, Katie, that when you think about a rally that's gone this far, this fast, and the way sentiment shifted in such a short time, some of this could be short covering. Watch out next week because a lot of the stocks that she's been looking at have hit resistance on a technical level, and they're not getting as high as they were getting before. So they could see a barrier.
And you have to weigh that, of course, with what's going on in the Treasury market as well. Just a breathtaking move lower in yields. And of course, a lot of that, too, might not necessarily be fundamental, but more of those technical and positioning factors that you're talking about.
Yeah, I mean, and it kind of gets to this idea of if it does unravel and sort of what would be, I guess, the catalyst that leads to that. We are getting the closing bells here in New York. Let's walk you through the numbers here. An up day and an up week for most of the major indices here in the U.S. We start with the Dow Jones Industrial Average, higher on the day by about 0.6%, up about 200 points, back above that 34,000 level, and adding to what is now gains of about 5% here on the week. Best weekly performance for the Dow going back to October of 2022. Meanwhile, the S&P 500 up 0.9% on the day. That's adding to about what is now going to be a 6% gain on the week, best week going back to November of 2022. And the NASDAQ Composite also getting in on the action, up about 1.4%. And again, once again, having its best week since November of 22. But look at this. We got to talk about the Russell 2000 here because it was an outperformer all day long, all week long, up about 3% here on the day. Its best day going back to mid-June. And on a weekly basis, an 8% gain appears to be locking in. Best week for the Russell, Carol, going back to February of 2021.
What a shift in sentiment, and going into a weekend, it's kind of interesting to see all this enthusiasm. You look at the S&P 500, 415 names to the upside, 85 to the downside. NASDAQ 100, you've got 84 names gaining today, Katie, and 17 to the downside. So really a risk-on trade once again.
Yeah, and you can see the same sort of story playing out in the industry groups as well. You have a bunch of groups higher right now. Leading the charge are those semiconductors and the semi-equipment companies. As I believe it, all of the names in that group are positive right now, leading it to a 2.6% rally. Consumer durables, consumer services, banks as well, also getting in on the action. You take a look at some of the losers. There's not many, just 3 out of 24, but it's tech, hardware, and right there at the bottom you have energy, not having too great of a day, down about 1% overall.
All right, so let me get to some of the individual gainers. Had a lot to choose from on this Friday, thanks to the rally. A couple of, I feel like a lot of experiential companies were definitely rallying in today's session. Expedia among them, finishing just off its highs of the day, almost a 19%, seeing this of a feel of an outlook, certainly from the analyst community. Gartner, we don't talk about it a lot, but it's a pretty big company. It's a $30 billion information services and research company. It is top among the S&P 500, climbed to a record today after boosting its full year projections for revenue and adjusted EPS, so up about 14.5%. And Moderna, this was number 1 in the NASDAQ 100, rallying after taking quite a hit yesterday following earnings and an outlook that was disappointing. HSBC, though, upgrading the stock to hold from reduce, saying the downside has played out. So you can see that stock up just under 9% in today's session.
All right, well, let's go to the other side of things. In the S&P 500, the worst performer on a percentage basis, the cybersecurity firm Fortinet, finishing the day down by 12.4%. Shares fell, Romaine, earlier by percent. It paired those losses to close at just 12% lower. The company cut its billing forecast for the year after its third quarter billing analyst estimate. Let's take a look at shares of Apple. It's actually the worst performer on a points basis in the S&P 500 today, finishing it down by 0.5 percentage point. We've been talking about it for almost 24 hours now. The holiday quarter revenue will be about the same as last year. We learned on the call yesterday. The company also reported its 4th straight revenue decline, streak that it suffered all the way back in 2021.
So all those iMacs and whatever they announced earlier this week, that didn't really move the needle?
I mean, those don't, show up until next quarter, until the current quarter that we're in. But there's a reason. Mark Gurman talked about it.
What's that?
About rushing out those new Macs to help that sluggish PC market.
So people couldn't buy those
for the holiday quarter, yeah. Okay. Did you want a new computer for the holidays?
I mean, I wasn't asking, but since you're offering to.
All right, the wearables, the wearables.
Do you want a refrigerator, or what was the other choice?
I'll take the boat.
The boat, that's right.
I might get you a $7 latte instead, Romaine. Love you, but all right.
Ouch.
Let's talk Bill.com. Bill Holdings, the parent company of Bill.com, falling today, down 25% at the end of the day. At one point, it was down as much as 35%. That would be the worst intraday in the company's history. The company cut its annual revenue forecast. It also reined in its full year projection for adjusted EPS. We saw a couple analysts cut their recommendations on shares.
Yeah, we have to talk about what happened in the yield space on the day and on the week, because it was interesting to start to see this rally sort of take foot here, and maybe there are some legs to what we're seeing there. Most of the curve shifting on the day lower, as you can see there on your screen, down about 16 basis points on the shorter end. That's your 2-year yield, and it's down, of course, on the week as well by about 17 basis points. A similar move on the 10-year yield. It's down 9 basis points on the day, but about 27 basis points lower about deteriorating economic conditions.
Yeah, it gets back into that bond math, right? And of course, they're going tit for tat over that, like you say. But I mean, it has been really the story of the past couple months, this supply that we're getting. And let's not forget, of course, in addition to the Fed, in addition to today's jobs report, we also got the refunding announcement. And bond sales are going up, but not as much as expected. And you think about what had been priced in, the sort of worst case scenarios, and you could make a case that this is just a fundamental sigh of relief that we're seeing in the Treasury market.
I will say, when we were at the Schwab event last week, Kathy Jones, who follows the fixed income market, she said she actually was looking at Treasury supplies and went back several decades to try and find a connection in terms of impact on rates, and she said she couldn't find any. So, because we were like, well, what about Treasury supplies? And
it's a very EM sort of thing. Doesn't usually happen in the Treasury market.
Okay.
Okay. I mean,
she kind of debunked it. Yeah.
I mean, I don't know if the data supports it either, but I think everyone's looking for that narrative as to why things are moving, because they shouldn't move, at least not to the extremes that they've been moving.
Hey, what do you guys think of the Bostic interview that we just saw with Michael McKee? I thought it was interesting, a couple headlines that crossed during that interview, Romaine.
Yeah.
You know, first of all, the Fed doesn't necessarily need to wait until inflation hits 2% to start cutting rates.
Yeah.
And the fact that, I mean, you know, we spoke to Steve Matthews a little earlier, and he said, you know, Raphael Bostic might be able to sort of get up and do some sort of victory dance, because he's been talking about the data that we saw today for the better part of a year at this point.
Yeah, of course, he doesn't have a vote, so we should point out that, I mean, just kind of clarify that. Obviously, his opinion still matters. But, I mean, I thought the idea here, though, also that him saying that, look, I mean, they have the luxury of waiting. I think he put a peg on it of something like 8 to 10 months, where the Fed can sort of just sort of stand and keep rates where they are while they wait and see. But the other thing I was interested in, too, was towards the end of that interview, he was asked about wage growth. And he kind of referenced this idea that those 10 to 15% salary increases people got, that's a thing of the past, and they were going to revert back to 2018, 2019 growth levels. And I went to look at the data because I wanted to see what the official data was, and that was like, we're talking like 3% growth rates on average that we saw back then. So that's a pretty big drop from what employers were having to pony up, if assuming that 10 to 15% was indeed what they were paying out.
Does Uncle Raphael come for Thanksgiving?
No. Well, you know, here's the thing. I'm positive that we're long lost, you know, cousins or something like that. And he's just in denial, which is why he dropped the K from the end of his name.
Okay.
I'm going to talk to him and see.
See, I was confused.
The family is ready to welcome you back.
I thought Mike McKee was going to interview Romaine, so I was a little bit disappointed when Raphael showed
That would have
up.
been something.
Yeah.
Don't forget, I think we get that senior loan officer survey, right? Don't we get that on Monday? So that'll be a good indication of how.
We're still paying attention to the slews.
It's been a while.
I'm kind of glad. Are we almost past the, because everyone's talking about how the Fed's almost done and we're always doing. I hope we're past the point where we're looking at these really small esoteric data
These
points
third-tier-
and trying to like make some sense out of what the heck is going on.
These small esoteric data points like you, Romaine. Just gonna say. They like you, I'm saying. You're kind of dissing them, and you're like, they
I
like
never know when
you.
she's complimenting me or insulting me. It's all just kind of a
Go
blur
buy
at
the
this
boat
point.
or a fridge,
So,
okay? Just do that over the weekend. All right, guys, that's a wrap. Our
I
cross-platform.
can't afford either one of those. Girl.
This economy?
Yeah.
All right, our cross-platform, radio, TV, YouTube, Bloomberg Originals. We will see you again next.
Shares finishing the day down under 1% lower, I should say. Look at this. Let's see. Yeah, half a percentage point lower, Carol. So it could have been worse, down as much as more than 2% earlier in the session. The company we know is facing a slowdown in China. It warned yesterday after the close that revenue in the holiday quarter is going to be about the same as last year. That's a sign to investors that they won't see the growth rebound that they were banking on. Who do we have to join us to talk about Apple.
The
Probably
one and
somebody
only,
who knows more about
amazing.
Apple than anyone else. I was going to say he eats Apple, he sleeps Apple, he dreams Apple. Mark Gurman is chief technology correspondent for Bloomberg News. He's been all over earnings. I followed him very closely on the live blog yesterday. He's got a great story out today. So, Mark, what do you think? I mean, first of all, I should note that the stock move today was a little surprising to me because, well, Apple's had a really good run year to date, but also it doesn't seem like investors were that concerned given that the shares only finished down 0.5 percentage point.
Yeah, thank you so much for having me. This is a mixed earnings report, I would say, right? On one hand, they did beat on earnings. They did beat by about $100 million. The downside is they came in quite a bit under on wearables, on Macs, and on iPads. And then on the other hand, from there, Tim Cook was pretty clear to say the iPhone actually, in his view, grew in China, right? And he believes that the iPhone had its strongest September quarter ever in China. So it was a quarterly record for the iPhone. And in the face of that, it's kind of hard to say, well, Apple's having this slowdown in China, but the iPhone had a quarterly record in China. How can both be true? So that's something that I think investors and analysts have been grappling with as they've been digesting those numbers. And I think that's why you see the fluctuation in the stock price. The other thing, as you mentioned, was that warning of what revenue would look like in the current quarter coming in line to a year ago. So no growth for the fifth quarter in a row. And I think that is where you see the negative mostly coming from. So it's all a balance.
So is Apple just a case of, I mean, the numbers are so massive with this company, no matter how you look at them. Is it a case it's going from being this, unbelievable growth company for so long that it's now a little bit more of an established company, and so it's going to have maybe not so much momentum? I don't know. How do you think about it? How do you describe it?
At some point, growth at these large numbers, like you said, has to taper out, right? And at some point, there will be growth again. There are different levers they can pull. In terms of revenue, how do you grow revenue? How do you double your revenue overnight if you're Apple? You release a $100,000 car. That's a quick way to grow some revenue. Who knows about profit on that, but you know about revenue there, and that could be important to investors in Wall Street and such. The Vision Pro over time, not in its first few years, but eventually mixed reality could be a revenue driver. And then look at what they did very quietly about a week ago, was raise pricing of services, $3 up on Apple News Plus, $3 up on Apple TV Plus, $2 up on Apple Arcade, and up to $5 of an increase on Apple One services bundles. So you see services generated over $22 billion in this September quarter. Look for that to eventually get to a $25 billion quarter business.
Does that go right to the bottom line, Mark? That goes right to the bottom line?
The Apple services are pure margin, so that goes right back into the company. You develop this content, you develop that infrastructure and that back end, and the additive cost of additional users is slim to none.
Yeah, it's pretty incredible, that business. I mean, I remember when Tim Cook, they separated that business out and created the services business.
Not bad business model.
It exceeded a lot of expectations, let's just say that.
Yeah.
Mark, what did we learn about China on the call? Did you get any color about iPhone 15 penetration there and questions that you had answered?
No. Here's what's so difficult about the China situation, and I've been trying to explain this all day to anyone who's willing to listen, okay? The issues regarding the iPhone in China, the beginnings of the government bans, the new bans on American devices in China at government entities and NGOs and et cetera, the concerns about Huawei and their new device there, that only really started in the month of September. And so the quarter, really started in June, right? And so you only have a few weeks of that overlap of the sense of nationalism, these concerns about the iPhone not selling. And so the real juice as to how the iPhone was impacted in China, that's not going to be known until Apple reveals its Q1 earnings. So we're really going to have to wait. In terms of Q4, everything was fine, but we really won't know the full picture for a few more months.
I always feel like when you're on, I want you to clarify for everybody about the importance of China to Apple, Apple to China. And I keep repeating it over and over again. I mean, that is something that is probably going to continue to exist for a while, correct?
They're inextricably linked, right? Apple gets about a fifth of its revenue from the greater China region. trying to make so much money off of Apple, and their economy is so reliant on Apple because Apple is one of their biggest manufacturing companies in China, or I should say Foxconn is one of the biggest manufacturing companies, and Foxconn's biggest customer is obviously Apple, right? And so certainly they're very much linked. And, you know, where Apple goes, China goes, where China goes, Apple goes. And there's a lot of opinions on if it should be that way or if it shouldn't be that way. My opinion, it's the reality, so that's what we're working with.
All right, I'm going to ask you something a little bit crazy here, Mark.
It is Friday.
Tim Cook has been at Apple for quite a bit of time. He's 63 years old. He's been CEO since 2011. I'm wondering if there's any sort of succession plan in place here, if you're starting to hear from analysts that, you know, Tim Cook is laying out a plan.
Well, there is a succession plan in place, and if something were to happen to Tim Cook in the near term, the COO, Jeff Williams, would be perfectly capable of taking over. He's really more of the same as Tim Cook. In terms of longer-term successors, there are a few people that I'm looking at. Definitely. Don't want to get into names right now.
Okay.
But yeah, that's certainly something top of mind. Tim Cook's sort of contract with Apple, shares-wise, runs out in about 4 years. And so I do think we are still a little bit away from any succession plan going into place. I mean, look at Bob Iger at Disney, right? Bob Iger, it seems like he can do Disney forever. Tim Cook is built from the same cloth, it seems. So I think it could really go in any direction, and he has the ability to stay there as long as he wants. It's not broken.
Apple Car, you started there. You mentioned it. I thought it delayed the debut for a while, but should we all be expecting that at some point it really is going to happen?
I think so, and I think a really good question to play off Tim's question is basically what's going to come first, a new CEO or an Apple Car? And I think those two may come in a similar time frame.
So I just want to confirm, just in the last minute that we have with you, are they still working on an Apple Car?
As far as I know, a car is still in development. What shape that will take, what form that will take, what form of autonomy they will use, those are all questions that I believe are still up in the air. The latest plans call for a level 4 car, which means not true level 5 autonomy, but as good as you can probably get with current technology, maybe 4 or 5 years from now.
Word to describe it.
With reliability.
A word to describe the Apple report.
Mixed.
Nicely done.
Mixed. You got good news on China, I think, to some extent, but we don't know the true news that we've been looking for yet, and they beat by a little bit.
All right, so appreciate it. As always, our own Mark Gurman, a must-read, certainly here for all of us internally, but for everybody externally as well. Mark Gurman is Chief Technology Correspondent for Bloomberg News. As you mentioned, he was on the live blog, which is always great, but check out all of his reporting at Bloomberg.com as well as on the Bloomberg terminal. Yeah, mixed. That makes sense. And we want to know a little bit more. I love it. Yeah.
Yeah, I think that makes sense.
Charlie Munger says Apple is still a good bet. That's what he told the Wall Street Journal.
Well, they own a lot of Apple. Berkshire Hathaway.
They do. Are you saying he's talking his book?
Well, I don't know. Just got to give me some context.
Just putting it out there.
Bloomberg Business Week is brought to you by Anshin Accountants and Advisors. Do you feel your accounting and tax advisors are the right fit for you and your business? If you're not getting the attention you deserve, find out if Anshin is right for you at anshin.com.
All right, everybody. It's been among our most read stories on the Bloomberg since the news broke last night. Sam Bankman-Fried, of course, convicted of a massive fraud. What you need to know about that verdict and who could be next as a target. That's coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg on to the weekend. What a week for the S&P 500 index. This week higher by 5.9%. Today, the S&P rallied 40 points, finishing the week at 43.58, up today by about 0.9%. The Dow rallied 222 points, up by 0.7%. The Nasdaq Composite Index up 184 points, up by 1.4%. Stocks rose, bond yields fell as signals of cooling in both the labor market and services reinforce the idea that the Fed is done with rate hikes while bolstering bets on cuts as early as June. 10-year yield 4.57%, the 2-year 4.84%. Spot gold up $6.50 the ounce to $19.92, up by about 0.3%, while West Texas Intermediate crude oil dropped 2%, now at $80.84 a barrel, lower by $1.62. Bitcoin 34,616 on Bitcoin, down 0.9%. It was an up day, but Apple shares declined. As we heard from our Mark Gurman, Apple dropped after earnings. Apple down today by 0.5%. Recapping, stocks higher, S&P up 41 points today, higher by 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, one of our most read stories on the Bloomberg today, no doubt about it. We got the verdict last night. We're talking about the case of Sam Bankman-Fried, convicted of a massive fraud that led to the collapse of his FTX exchange following a month-long trial that pitted the testimony of the former crypto king against some of his closest friends.
That happened fast, Carol.
It did happen fast.
I mean, think about how long Elizabeth Holmes was sort of in limbo before sentencing. And he hasn't been sentenced yet, but...
No, but the verdict came down pretty quickly.
Very quickly, yeah. Bankman-Fried, for those catching up, he was found guilty of 7 counts of fraud and conspiracy after jurors in Manhattan deliberated for fewer than 5 hours on Thursday. Mm-hmm. He faces as many as 20 years in prison on each of the most serious charges. Judge Lewis Kaplan set the sentencing date in late March.
All right, so let's get to our weekly check on the crypto market. Thoughts on the trial, the verdict, the future legal woes to come maybe for others in the industry. With us is Bloomberg News legal reporter Ava Benny Morrison. She's been following SBF's trial in Lower Manhattan throughout. She is on Zoom in New York City. And also with us is Stephen McClurg. He's Chief Investment Officer of the financial services firm Valkyrie Investments, former Managing Director at Guggenheim Partners, where he was focusing on fixed income and private equity. He is on Zoom from Nashville, Tennessee. Hey, Ava, I want to start with you. What a month. I believe you got married in the middle of it too, but is that right?
I did.
Congratulations.
Congratulations.
I mean, not great timing with what you're covering right now, but I think the wedding is
like I'm going down the aisle. Like I'm going. But anyway, so quick verdict. It felt like, was it not? Talk to us about your kind of the process and then the verdict coming down so quickly and what ultimately happened.
Very quick verdict, actually. After the jury started their deliberations yesterday afternoon at about 3:15, we were taking bets in the press room of when the jury would come back. And I actually bet that it was going to be last night. So I think someone owes me lunch for that. But it was a very quick turnaround. They had a couple of notes early in the evening. The judge had said that they could stay if they wanted to and deliberate until 8 p.m. last night. They decided to. They were going to have dinner, get a car, Uber or a Lyft home, and they submitted a couple of jury notes, asking for highlighters and post-it notes. They also asked for transcripts of certain testimony from institutional investors at FTX. So we thought maybe they might be in for the long haul, but then about 20 minutes to 8 p.m., the 8 p.m. deadline, they came back with another note saying that they'd reached a verdict. It was a little bit frantic in the actual courtroom because people weren't really expecting it at that point. Everyone was sort of moving around, jostling for a seat, and then all the lawyers, the prosecutors, and of course Sam himself and his parents walked in.
What was Sam's reaction when the judge or the jury, I don't know who read this, we don't have cameras in there, you were in there. What was his reaction when he heard the verdict?
Sam was very still when he was sitting at the bar table between his two lawyers. Usually he's sort of bouncing his knee around and you can see him fidgeting a little bit, but last night he was dead still, almost like a statue. The judge asked him to stand and face the jury. The jury, four-person, read out the guilty verdicts one by one, saying guilty 7 times. He kept his eyes down, looking at the floor most of the time. His hands were in front of him, and he was completely unemotional. He looked stunned, almost a little bit shell-shocked, and before sitting down again. His parents, though, were completely distraught. So they were sitting on the bench in front of me in the courtroom, comforting one another.
I can only imagine.
It was quite difficult.
Stephen, come on in on the conversation. How do you think this trial might potentially impact the crypto market and the interest of it as an investment or means of transaction? What might be a longer term impact, if any?
Yeah, well, thanks for having me, Carol and Tim. My initial reaction was, we're glad that this is finally behind us, because the FTX situation and all the other related issues has had a really broad negative impact on the industry for about the last 18 months. We weren't immune to the damage either, despite not having any kind of relationship to those companies. And now that we finally have a verdict, I feel like investor confidence in the crypto market will start rising again. We're already seeing confidence coming back to the markets. Usually when there's a fraud, it can affect any market segment, but when justice is served, which was served yesterday, and we'll finally get the final verdict later, there's usually a relief, and a relief rally comes with that, and a recognition that the next fraud is going to be harder to pull off and that criminals will get caught.
Bitcoin's actually down a little bit, about 0.8% today. I know it's one day, but just saying.
Yeah.
Stephen, can you talk a little bit about the damage that you guys experienced as a result of not just this trial, but of the downfall of FTX? You referred to it, but what specifically did you see at Valkyrie?
Yeah, over really the last 2 calendar years, and it didn't start with FTX. It started with Celsius and Voyager, and a couple of other BlockFi is another good example. And then the pinnacle was really FTX. But we really saw less flows coming in, whether it's through ETFs or whether it's through hedge funds that we manage each. So we really did see flows start to dry up. And when the FTX trials started coming around earlier this summer, we did begin to see flows coming back to the market. So it really was a case of investor sentiment saying, I don't want to touch that market for a little bit until we understand really what's going on. Markets like certainty. And I think they wanted to have certainty that it wasn't a crypto problem, rather it was a fraud and criminal problem.
So, all right. So, Ava, how are you kind of thinking about the crypto world from a legal perspective? Lionel Laurent has a Bloomberg opinion column out, and he says SBF won't be the last crypto mogul behind bars. So there are other cases in litigation out there.
Yeah, do the Bloomberg quiz this week, Carol.
Oh,
that's a nice hint for a question on there. Okay.
That is very true. So are you anticipating that you're going to get
what the vehicle is that's being used to perpetuate this fraud. So FTX was one of many crypto companies that the prosecution office went after. We're also waiting to see what happens with Alex Mashinsky, who's the founder of Celsius, Do Kwon, who is the founder of Terraform Labs. So it'll be interesting to see, I guess, if you can take any lessons from what happened with FTX. Obviously, there was a lot of evidence in this case, and the prosecution was really blessed with having 3 insiders from Sam Bankman-Fried's inner circle turning around and agreeing to be cooperating witnesses for them.
So what happens to them, Ava?
They will be sentenced. They've sort of done their bit for the government, and the judge will weigh up just how valuable they were and then determine what their punishment would be. Those executives, just to refresh everyone's memories, were Gary Wang, the co-founder of FTX, Caroline Ellison, who is the CEO of Alameda Research, and Nishad Singh, who was the engineering chief at FTX. They all had cooperation agreements with the government and gave evidence. And they were saying, we're hoping we don't get jail time from this. So we'll have to wait and see.
Stephen, got about a minute left here. What would you like to see in terms of government oversight or rules or greater transparency in the crypto world?
Yeah, I don't think it's necessarily an issue with crypto, and I also don't know if there's necessarily investor protections, additional investor protections that need to take place here. The bottom line is sophisticated investors were fooled here. We just happened to be fortunate enough to have a really stubborn and risk-focused team when we were engaging with counterparties like Celsius and FTX, and decided not to engage with them because they didn't fulfill our process of due diligence. And I think what happened is, anytime that there's a new market and there's hype around that market and people making money, it does create a bit of FOMO, and people forget their process. People forget their past learnings, whether it was learnings from Enron or learnings from Madoff. I mean, I was a credit analyst looking at Greece when the Greek debt crisis came about, and avoided it. So we avoided these issues, and I think people just have to remember that you follow a process, you do your due diligence, and you make sure that you mitigate risk.
Stephen McClurg, thank you so much over at Valkyrie, and of course our own Ava Benny Morrison covering the trial for us.
Hey, let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Secretary of State Antony Blinken is in the Mideast, where he met earlier today with Israeli Prime Minister Benjamin Netanyahu. Blinken says they spoke about the number of innocent civilians being killed in Gaza.
We provided Israel advice that only the best of friends can offer on how to minimize civilian deaths while still achieving its objectives of finding and finishing Hamas terrorists and their infrastructure of violence.
Blinken reiterated the need for a humanitarian pause in Gaza, but Prime Minister Netanyahu says he will not consider that idea unless Hamas returns all its hostages. Well, while Secretary Blinken was focused on the Mideast today, President Biden hosted a meeting of Latin American and Caribbean leaders. As Bloomberg's Irv Chapman reports, they discussed new initiatives to improve infrastructure and economic development in the hemisphere.
In his opening statement, the president made an oblique reference to China's efforts to expand its economic influence.
The United States is already the largest source of investment across Latin America and the Caribbean by far. Our closest neighbors know they have a real choice between debt trap diplomacy and high-quality, transparent approaches to infrastructure and to development.
The president said the participating nations would seek to finance entrepreneurship, train workers for the digital future, and deal with the unprecedented migration levels that impact much of the region. In Washington, Irv Chapman, Bloomberg Radio.
The president and first lady are spending the afternoon in Lewiston, Maine, where 18 residents lost their lives in a mass shooting that took place in a bowling alley, also in a bar. He told them it's time to consider common sense gun measures. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Profits, headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. Stocks rose, bond yields fell, Goldilocks is back. The signals of cooling in both the labor market and services reinforce the idea that the Federal Reserve is done with rate hikes while bolstering bets on cuts as early as June. The Dow, the S&P, and NASDAQ all advanced today on the week. The S&P 500 index was up by 5.9%. S&P today up 40 points, finishing the week, heading into the weekend at 43.58, up by about 0.9%. The Dow was up 222 points, up 0.6%. NASDAQ was up 184 points today. That was a gain of 1.4%. 10-year yield, 4.57%, with a 2-year yielding 4.83%. Spot gold up $6.50 the ounce to $19.92, up by 0.3%, while West Texas Intermediate crude oil was down 2%, $80.78 for a barrel of WTI. Jobs Friday, and Jennifer Lee of BMO Capital Markets says the jobs report is just one data point that the Fed will use to determine its next move on rates.
It's going to be all about all the other data, how consumer spending is faring, how inflation is faring, how Supercore is faring. Everything has to be in place for the Fed, to start, contemplating cutting rates, probably middle of next year.
BMO's Jennifer Lee. S&P 500 index again up 40 points, up by 0.9%. On a day when most stocks advanced, Apple was down after earnings. Apple fell today by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Masser, along with Tim Stanovic, live in our Bloomberg Interactive Brokers studio on YouTube and, of course, on Bloomberg Originals.
Well, the numbers, Carol, are not pretty. Less than a quarter of the 292.4 million tons of municipal solid waste, read trash, that was generated back in 2018 was recycled. That's according to the latest figures from the U.S. EPA. Actually, it's kind of more than I thought it would be. Yeah, so that's,
Yeah, 25%.
Yeah.
You thought it would be less?
Thought it'd be less. But there's a long way to go.
Yeah, and our next guest actually thinks we could do a lot better. Keith Harrison is the founder and CEO of the Recycling Partnership. It's an industry-funded nonprofit that advocates for improving recycling infrastructure and accessibility. The Recycling Partnership says that over the last 8 years, it's diverted 770 million pounds of new recyclables from landfills, which has avoided more than 670,000 metric tons of greenhouse gases. And Keith joins us on Zoom from Washington, D.C.
That's legit. That's a lot of greenhouse gases that have been avoided. Keith, thanks so much for joining us. Excited to have you with us this afternoon. I love talking about recycling because I think that there are so many.
You're composting now?
I'm composting, got the garbage disposal too, separating, here in New York, we got to separate everything into, it's not single stream. But one thing that Carol and I were surprised to learn recently is specifically about plastics and to what extent plastics are not actually recyclable in this day and age. So I want to start there, and then we'll get to what's going on with America Recycles Day a little later in the month.
Sounds good. Sounds good. Thanks for having me in today. Glad to talk about this. If you want to go out to dinner afterwards, composting, also a favorite topic.
Okay, that's awesome. Well, we got plenty of time. So talk to us about what's going on with plastics right now, because a lot of people have this misconception that if they recycle it, then it just gets reused and made into something else, which is beautiful.
And if we see that thing on the bottom, that like circular or
just
the
throw it in the
triangle,
recycling bin.
We think, okay, it's going to get recycled.
Who cares about the number in there?
Exactly.
Well, yeah, you know what? There's been a lot of recycling has been in the news a lot lately, and some of the stories are really depressing. And I want to start with the story of hope, that it's not working exactly as we need it to, but we can fix this sucker, and then we'll have something else to talk about on the other side. So when we look at what's really happening with recycling today, we see a huge opportunity for improvement. We see that 7 out of 10 cardboard boxes end up in the trash. That's very similar to 7 out of 10 PET bottles and glass bottles also end up in the trash. Is that fixable? Yes. What happens when we do? Even more carbon savings, as you outlined. So the story on plastics, though, gets a little bit trickier because there are so many types of plastics. One word, many different things. So you really have to understand the strata of opportunity so you can go after the easier to fix ones like yogurt cups and PET bottles, and then build a longer timeline for the stuff that's trickier like plastic wrap, stuff like that.
Well, you know, we talk a lot about trash here.
You know, Carol talks a lot of trash. That's what happens.
I do that too. Sorry, guilty as charged. No, but I do wonder about you know, the impact of landfills and garbage in a year where climate change felt like it was, you know, thrust in front of our face. If you didn't believe it, like you couldn't ignore some of the stuff that was going on, whether it was temperatures or fires or what have you, or you know, the skies over New York and the New York Metro turning orange. So landfills, just remind everybody about the impact that they have on the environment.
Yes. Landfills are purposely made to keep out air and sun and rain. We purposely cap them. We encapsulate them actually in plastic to keep things from breaking down. Because when they break down without air, light, and rain, it creates methane. That anaerobic state inside of a landfill creates methane. However, well, although the intent is to prevent things from breaking down, they still do. And in fact, landfills are one of the biggest emitters of methane, which is one of our strongest and most potent greenhouse gases.
So we should all be composting, is what you're saying.
Back to the compost rate. Yeah, actually, food waste is, the EPA just released a really good report about the role of food waste and organics. So banana peels and your yard trimmings, what happens when those land in a landfill. But it's also, you know, things that naturally break down like fiber, paper products, and things like that. So we have to be really careful before we casually toss something into a landfill because it is directly connected to the climate.
I don't think people know this. This is the problem.
I was going to say to you, like if you go, like in California, don't you have like multiple cans? Like you have to divide.
Yeah,
like
and it's pretty amazing. I mean, every time I go
ways.
back to see my parents in California, the can situation changes. And what's happened is the recycling can has gotten huge. The compost bin has gotten huge. The trash can has gotten tiny.
I love that.
Tim, that is the future.
It's incredible to see this.
Right. And so what we're trying to work towards is instead of it just being like that in California or in New York City, having really strong recycling programs, but it's a different way, we're trying to build harmonization. And so I get really interested in the role of policy to make it consistent from one place to another, but to also level up that caliber of service so that you can make sure you're composting, you can make sure that you're recycling as many different things as possible. We want old stuff to turn into new stuff so that it never hits that landfill. And the role of policy is a new tool that we're seeing on the U.S. landscape to create a consistency. And I think that's where we're really going to see the most system change happen.
Well, and I do wonder too, what would be, you know, one thing that we could all do better? Because in New Jersey, it's like paper, plastic and glass. And garbage.
Cement shoes.
Hey. So what can we all, that hurts, Tim, that hurts. What can we all do to make it better?
Well, I think if you're traveling, especially as we come into the holidays and you're going from one place to another, check out recyclecheck.org. This is a brand new tool we just launched, and it gets past this idea of, can I recycle this where I am? It connects to the 9,000 different recycling programs that are in this country and allows you to very easily understand, can I recycle this where I am? Now, this is a super duper tool. The public can use it. We're partnering with other tools and platforms so that people don't have to come for us for the data, but wherever they go to get their data, they can find their recycling information. It connects. We use AI technology. We are constantly updating it across the whole country. And I think this is really, really cool. So, you know, your listeners who are thinking about this as they might be commuting home right now, putting your home hat on, it's helpful as you're traveling to visit family to know what's recyclable. But if you also run a business that packages anything that might be waste or trash, this is a really cool tool for you too, because if you're doing work to green your product, it allows you to have consistent communication so that when you're there visiting your folks in California and then
Things
back
to
in
think
New York.
about going into the weekend. Keith Harrison, thank you so much of the Recycling Partnership. She is CEO and founder. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Investors are placing big bets on DraftKings today with the stock up 16.5%. DraftKings reported sales and player numbers that beat analysts' expectations as the sports betting operator continued to gain new business. The Boston-based company generated sales of $790 million. That was well ahead of analysts' expectations of $703 million. DraftKings today up by 16.5%. Goodbye, Seattle, and hello, Miami. Amazon founder Jeff Bezos is moving to Miami from the Seattle region, relocating to be closer to his parents and the Cape Canaveral operations of Blue Origin, his space exploration company. More from Bloomberg's Lisa Mateo.
Charlie Bezos, the world's third wealthiest man, according to the Bloomberg Billionaires Index, made the announcement via Instagram, which included video of him in his Seattle garage where he founded Amazon in 1994. Bezos' Amazon helped transform Seattle. The company is the city's biggest employer into a technology hub with offices in the downtown core. He stepped down as Amazon Chief Executive Officer in 2021 to become the company's executive chairman. He was succeeded by Andy Jassy. Miami has emerged as a popular destination for elite entrepreneurs. Hedge fund tycoons Ken Griffin, Dan Loeb, and Josh Harris have also scooped up lush waterfront Miami Beach mansions since the pandemic. Charlie?
And that's Lisa Mateo reporting Amazon shares advanced today by 0.4%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenevec and Carol Masser are live in the Bloomberg Interactive Brokers studio in New York. Let's get a check on latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden and First Lady Jill Biden are spending time today in Lewiston, Maine, to mourn with the community that recently lost 18 people in a mass shooting at a bowling alley and then a bar. President Biden says it's time to use common sense regarding guns.
Regardless of our politics, this is about protecting our freedom to go to a bowling alley, a restaurant, a school, a church, without being shot and killed.
Biden told those gathered this afternoon he's been in too many communities where guns have taken too many lives. There have been at least 37 mass killings in the U.S. so far this year, leaving at least 195 people dead, not including shooters who died. Well, the U.S. Supreme Court says it will decide the fate of the federal ban on bump stocks for guns. Those are the attachments that let a semi-automatic rifle fire like a machine gun. It'll be the second gun case before the court this year. Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent of Bloomberg Radio, is a donor to groups that support gun control, including Everytown for Gun Safety. President Biden's top diplomat is pushing for humanitarian pauses in the conflict between Israel and Hamas. During a visit to Tel Aviv today, Secretary of State Antony Blinken called for a temporary break in fighting in order to allow the flow of more aid into Gaza and to let hostages be released from Hamas.
We remain relentlessly focused on securing the release of hostages, including American citizens. We discussed these ongoing efforts today. Our Deputy Special Representative for Hostage Affairs, Steve Gillen, who came with me on my first visit a couple of weeks ago, has remained here on the ground to help bring our people home and also to work with their families.
Blinken says he also told Israeli Prime Minister Benjamin Netanyahu that more must be done to prevent the deaths of innocent civilians in Gaza. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. We bring you news throughout the day here on Bloomberg Radio, but now you can get the latest news on demand whenever you want it. Subscribe to Bloomberg News Now to get the latest headlines at the click of a button. Get informed on your schedule. You can listen and subscribe to Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, plus Apple, Spotify, and anywhere else you get your podcasts.
You can get us anywhere. Check it out. That's pretty cool.
We're all over the place, Carol.
So accessible.
Sometimes I am all over the place.
Well,
it's an issue for you when that happens, but
it's
an issue for our producers when that happens. Like sometimes I'll say the wrong name of, some guests coming up, and I'm just all
where
over
they're
the place.
located.
It happens.
It's lucky he still likes us. Having said that, I'm still kind of obsessed. S&P 500, the best week in 2023. Having its best week. Is that it? Is that the last hurrah?
A lot has changed since last week. A lot has changed.
What a different tone. What a different tone. Hey, listen, coming up, though, our Bloomberg Business Week weekend show tomorrow at 8.